The market is quieting down, but I've always heard to be cautious the quiet market. Let's find out what Brian Stutland, the founder of Equity Armor Investments, has to say. And are you cautious this quiet market?
You really do. And I think what's going on here is we had such a move up at the end of the quarter here, whether that was a short squeeze in the markets that pushed it higher, or people were just printing it up into the close of the quarter to get things a little bit higher, sort of put people to sleep a little bit. We've had some quietness over the last couple of days, but I think when you look at what's going on with the interest rate environment, there are still some concerns out there. We're still looking at volatility somewhat elevated compared to normal, what we saw a few years ago. And we're looking at an interest rate environment where the Federal Reserve is going to start to hike interest rates the rest of the year. So there are still some concerns down the road.
Traders and investors are obsessing over the inversion of the yield curve between the 2-year and the 10-year, and that it's signaling recession. But should we worry?
Well, I think yes and no. I mean, yeah, people are obsessed with it. And when people all pile into one trade or look at one thing, usually what happens is the opposite, right? So in that sense, maybe that's not so bad for the market. But when I think you look at the concern of it, is it becomes down to borrowing costs. And what typically happens is, although we've inverted on the yield curve between the 2-year interest rate and the 10-year, and that's usually bad, what can happen is the market can actually go higher after that, and typically does. It takes 6 or 12 months for some of that interest rate issues to play out in the market in a recessionary fashion. So I don't think it means sell the market right now. Short term, actually, I think if we get above some levels here that we've seen in the S&P 500, call it 4580 or so, I think the market can rally in the short term. And I think if you're owning companies, which I'm doing for clients right now, is owning companies where things that you need, not necessarily that you want. So for instance, that doesn't mean I'm not buying tech companies. For instance, the cloud is somewhere where I think people need. I think in some of the other areas, the consumer staples is areas where people need things. And those areas I think can go higher still with this market.
Are you a buyer or seller of the market, Brian?
Well, I think like I mentioned, I think I'm a buyer short term. I think if we clear some hurdles here, if the markets move another 1% higher or so from here, I would actually be a buyer all the way into this next quarter, because I think it means that the quarter coming up here, the earnings reports are going to exceed estimates. I think longer term, when I'm a year out, I want to see how aggressive the Federal Reserve gets. If they start continuing to hike 50 basis points at a time and need to get more aggressive, and inflation really continues to be a problem, then I become more cautious the second half of the year. But for right now, I'm a short-term buyer, maybe a long-term seller, something I'm looking out for down the road.
Thank you, Brian, for your Trader Talk.
Thanks a lot.
Go to businessfirstam.com for where to see our show on TV.